Hey, everybody, Candace Lowman here. And have you all heard the news? Fannie Mae removed the minimum score restriction on getting approved to buy a house. Now, there are some definite effects to this. There's some positive things for this. However, it isn't quite what you think it is. But we fortunately are going to get to the bottom of this. And I have brought on the credit aficionado, Derek Faber of Scarlet Arrow Credit Repair. Guy knows more about credit than I care to know, terms that I don't even want to know. So we're going to delve into this thing. On the get, it sounds like a pretty good thing. Now people with lower scores can qualify. But let's talk about, what does this really do? What does this really mean? And what does this mean about credit? Mr. Faber.
The biggest thing that this changes is for people that have no credit or a very, very thin profile of credit. Anybody that has negative items and things that are dragging your scores down, you're still not going to qualify because it still has to go through underwriting and it's still a risk assessment, which is all your score is. It's an easy way for you to look at three numbers and see whether your credit sucks or not.
Well, pretty much, yeah. And one thing about, you said underwriting, I want to be clear, what we're talking about is automated underwriting. This is automated underwriting, which is the first round of defense for anyone that's wanting to buy a home, or the first round of offense, I would say, on someone wanting to buy a home, because not to be offensive, but the offense, to allow you to get started, to move the ball down to where you can get into the end zone of owning a home. But as far as what that means, now you're saying if there's still, the credit scoring is fine, to lower that is great, but you still have to have the positive credit to allow for the risk threshold to approve in an automated system. Is that what you're
Yeah,
saying, in your
and so
opinion?
what people got to realize is that all credit is an assessment for those giving you money to realize whether it's a good loan for them or an investment in you or not, based on your previous financial decisions that you made, aka you're actually paying the bills that you
Yeah.
agree to pay. And
Right.
so the more information you give them, the better the picture, the better the solid foundation they can make that decision, knowing you're actually going to pay them back. And so when you have a thin profile, which I guess I should define what that means that you've only got a few accounts in there and they're not very old. So there's not a lot of information for them to go off of. This opens it up where they can look at other things and allows them to have a better opportunity for approval. But if you have a lot of negative things, you've got missed payments, you've got some collections, you've had some mishaps, life has thrown some curveballs your way, those items on your credit report are still going to affect the chances of you getting approved or not.
Okay. So just because the scores are lower doesn't mean necessarily that we're going to get approved, because strength of credit is still important to an automated approval, which I would totally agree as a loan officer's perspective. In the mortgage side, strength of credit is huge. You can even have a qualifying score, and if you don't have the strength of credit, that automated system could just boot you out until we either have a stronger cosigner. And here's something to also throw out there as well. If you have a cosigner that has a very strong credit rating and a very strong score, in my opinion, this would allow more people that have that lower score to qualify.
And one thing that I want everyone to realize, in order to have credit at all, you have to be using credit, right? So
Mhm.
this doesn't mean now credit's out of the way. We don't have to worry about anything, but we can be very pro credit and anti debt at the same time, which is going to help
Yeah,
your lender
right.
get you approved because of all the numbers that he's got to balance out. But what I want you to do is have one or two credit cards, use them once or twice a month on things you're already going to be spending your money on anyway. Don't go out and go into debt or buy a bunch of stuff you don't need. Spend it on groceries, spend it on
What?
gas so you can get to work on time every single day. Pay it off the same week that you use it, and then don't touch it again to the following month. So the credit card company is registering you're using it, you're paying it off, and then you're not touching it. And then the credit bureaus are getting that information sent to them once a month saying, hey, guess what? They used their card. They paid it on time. Everything is good. You're showing financial responsibility. And that's what they want to see on your credit profile. Even if
Financial
you
what?
eliminate all scores altogether, that's going to help you
Financial
get approved.
financial what? What financial what? What'd
Financial
you
what?
say? Financial what?
Financial responsibility.
That's crazy. Yeah, that's wild. That's just too much. Yeah, that's just too much. Financial responsibility. Yeah, that's huge. And that's what we're talking about when you're talking about qualifying for buying a home, which is why I've brought our credit aficionado in here is because it is about financial responsibility. It's about credit responsibility and learning how to use it. A lot of us haven't really been taught how credit really works or how to use it. Our folks didn't know, other people didn't know, or we just didn't ask, didn't want to know. Now you need to know, especially with this going on. I do think this could be a great door open for those that have a good co-signer to be able to come in and help you purchase a home. Or if there's two of you that need to be on the loan for debt ratio purposes so you can qualify, now there's a higher possibility we might be able to get you qualified because one of you has a 750 score, one of you has a whatever lower than a 620 score. I don't want to commit myself to something here, but lower than a 620, it's possible then that could help you because the threshold has been changed to allow you to qualify. It also determines on the amount you're putting down. Those regulations, I'm getting updates on whether those regulations have changed or not, how that's going to affect it, how the debt ratio is going to affect it, because there's a lot more than just that credit score that goes into you qualifying. That's just the beginning stages of this amazing change that could help some other people get into a home with the right situation, with the right perspective, with the right cosigner, with the right credit that's open. It could be great. It could be a good thing. I wanted to clear that up though. What do you have any further comments on this from your side of things, expertise wise, that might be good for our folks listening?
Just the biggest thing is your credit profile is built by information that it's being fed. And so if you get a loan that doesn't report any of that to the credit bureaus, that's great. You're getting the product or service that you wanted, but it's not actually building your credit profile.
Yeah.
Make sure everything with your finances is done with intent. When you do open up a loan or any account, make sure it reports to at least 2 out of the 3, preferably all 3, because it's really hard to get a mid score if you've only got 1 or 2 of them. But if they
Yeah.
even if everything goes to this new system with there's no more credit scores, great. You still need to know what information is on your credit profile, because that does not mean they're no longer looking at the history of what your financial decisions are and how responsible you are for paying your bills. And that's what really matters. Pay your bills on time, every time, and you don't even need to talk to me. But if you
Right.
do need to talk to me, I'm always here to make sure that we can get you back on track.
I like that boy. That boy's good. I like that boy. He good. Yeah, financial responsibility, credit responsibility, learning how to use it. If you have any credit questions about what's good, what's bad, talk to my boy here, Derek, at scarletarrow.com. You can get a hold of him there. Hey, this has been great information. We're really excited about the change from Fannie Mae and excited to get clarification on what that really means for our people wanting to buy a home. So if you want to know if you qualify, get a hold of me, Kansas Loan Man, kansasloanman.com, wheelkingmortgage.com, and we can talk. And my number, of course, y'all got it, or you can just get online and there I am. So I look forward to talking to everybody. Thank you, sir, for coming on. I appreciate your expertise as always.
Anytime.
All right. Kansas Loan Man out. Have a great Friday, everyone.